Hi everyone, my name's Amanda and I'm here with my tax technology partners, Carter and John.
Howdy.
Howdy.
And today we're going to talk to you about a topic that's often overlooked by a lot of businesses, and that is indirect tax. So as we know, taxes in themselves are very complex, but indirect taxes take it even further. It's comprised of sales and use tax, property taxes, and value-added taxes. So to explain each of these, your sales tax is a tax paid to a governing body on the sale of a good or service, and this is very commonly used in the United States and other countries, and we're very familiar with this. A use tax is what's paid whenever you don't pay a sales tax, so it ensures that the government is getting their fair share of your purchases. Property taxes is just a tax based on the fair market value of property, and different states have different rules depending on if it's real property, tangible, intangible, and so on. And your value-added tax is a tax that's added throughout the production life cycle of a product.
So what are some problems that we see come up within indirect tax? We'll focus on sales and use tax first. Each state within the 50 states has a different sales and use tax rate. Each county within those states also has a different rate, and even within the counties, different districts can have different rates. As you can imagine, if you're a business operating in each one of these states, counties, and districts, gathering all of this data and trying to come up to an accurate sales and use tax number can be very hard. There's a similar problem in the value-added tax space. Trying to calculate the correct tax for moving from raw material to finished good is a hard process and takes a lot of calculations and a lot of data that comes into that. Fortunately, technology helps us solve this problem.
Thank you, Carter. So as you can see on the screen, we have 6 different automation technologies that help in the real world today, but these aren't the only ones that are out there. So with third-party tax engines, a third party is in charge of maintaining your tax data, whether that be updating the rules or changing the rates as necessary. And you can bolt this onto company-wide ERP systems or other smaller processes such as calculating sales tax. With return preparation software, you import data from, say, a tax engine, and with the software, it autofills the data and does your calculations for you, and you can just store this electronically. Look at that. Exempt certificate management software. So what an exemption certificate is where a company presents this, and it shows that they're exempt from paying a certain tax. And so with the management software, you can store this all digitally in one spot. With custom software solutions, a matrix is designed to test certain transactions to see whether or not they're exempt. And the software also validates whether or not you can enter in certain fields to make the data useful. Data warehouses. So think of this as like a physical warehouse. It's a central integrated data place from multiple sources that just centralizes data and makes it easier to help with reporting and doing data analysis. With RPA, also known as robotic process automation, this is where an electronic robot, not a physical robot, automates redundant high-volume calculations or work. And it creates value-added stuff for employees of the company that could save time from doing otherwise these redundant activities.